please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Bazaar Morning Call, live from the CNBC TV18 headquarters in Mumbai.
Good morning. Welcome to Bazaar Morning Call. I'm Lata Venkatesh and with me is Sonia. We are still missing Anuj and Anuj is missing a massive bull run across all markets. I think this is a growth-triggered bull market and nothing triggers a bull market as much as growth. Everything else is secondary, but US growth job numbers did not get the attention they deserve. Yeah. It clearly is the motor of the global economy even now, and jobs is the motor of the US economy. So that 213,000 job numbers of Friday is finally getting the respect it deserves, I would think, and across the board. Trade tariffs, yes, they are a minor irritant, but they don't seem to be at the moment, at least in the eyes of the smart investor or in the eyes of the traders. It's not seen as stopping this global growth, which clearly seems to have been triggered from the US and is kind of chiming in Europe as well. And hence, looks like, a rising tide lifts all boats, and it lifted our boat as well. Yeah. Yesterday, we crossed 10,850, which has been a resistance several times over, and ended 2 points above that resistance. I remember asking Ashwini in markets today whether, this is good enough. The range of, 10,700 to 850, which we have been banging for so many days, is it finally taken? He said, not convincingly. 2 points is not a convincing breakout. If it is 10,893, then I will be convinced. So here we are we breaking the range?
Okay, well, let's see. We have some more time before we can come to that conclusion. But Lata, morning, I take your point entirely about growth. A couple of data points that I just want to put out. One is that, we've seen strong data come out from the US. The jobs was good. But yesterday, the consumer credit numbers also looked very good. So consumer borrowing rose by almost $25 billion in the month of May. And that's the highest we've seen in the last 6 months. So looking pretty good there. Also on earnings, Bank of America Merrill Lynch yesterday raised their 2018 S&P earnings forecast by 4%. And they based this solely on the rise in crude. So they say that 40% of the higher earnings will come from those companies that either produce commodities or supply to commodity producers. So, these two data points just indicate that growth, as you pointed out, is the key parameter on which these markets are rising. In that context, technical indicators important in the US as well. The Dow closed above the 50-day moving average for the first time in 3 weeks. So I guess maybe the going could be good from here.
Yes. Only thing is, when it's a commodity-led rally, the lead, because we do have some disadvantages when crude rises. Of course, when there is a bull rally, the Sensex and the Nifty rise with crude. And we saw that from 2003 to 2008, crude had gone from, $30 to $120. And we had seen, a huge rally from under 2,000 in the Sensex to 23,000. So, when there is a big bull rally, equity indices, even in India, stay in step with crude. But initially, we will be underperformers. We will still rally because this is a big bull rally that's playing out over the last 2 days. Now, we don't know what's going to be the shape of this rally by the end of this week. For the moment, the going is good. And I think despite negatives coming to us from Brent crude, the Nifty could overtake it. Only thing is the OMCs will not participate. Okay, we'll talk about all that and more through the course of the day. But for now, at least the going is looking pretty good. Let's take a look at what our wise experts have to say as we head into trade this morning. Gautam Dugar of Motilal Oswal Securities says that they expect the companies under their coverage to show a profit growth of 26% year-on-year on a low base. He adds that global cyclicals will drive the performance for the second consecutive quarter and account for 65% of incremental profits. Defensives are expected to post a 15-quarter high profit growth at 14%, aided by IT and consumer stocks. Gautam says that profit growth for these companies, excluding PSU banks and private corporate lenders, is expected at 32%. Telecom, PSU banks and cement are expected to report muted numbers. They expect Nifty sales, EBITDA and PAT to grow by 23%. That is sales, 23%, EBITDA and 26% earnings. This on a base of 11, 4 and 6. I think you have to see it in a table to understand. PAT growth is expected to be 26%. If delivered, it will be the highest in 16 quarters. Motilal Oswal's Nifty EPS estimates are largely stable for FY19 and FY20 at 580 for FY18, 690 for FY20. The year-ago number is 579 and 693 respectively. They are building a Nifty EPS growth of 26% for FY19 and 20% for FY20.
Okay, let's also get you some money market views, right? Yesterday, we did see some amount of recovery in the rupee. It closed at 68.71 against the US dollar. What triggered the rupee's gain on Monday? Bhaskar Panda of HDFC Bank says the latest non-farm payroll data did not give clear indications as it was lower than expectations. Risk rally, which had started, continued to Asia session today. Bhaskar adds that both crude and the dollar index are stabilizing at the higher end. And given this background, he expects the rupee to trade in a range of 68.60 to 68.80 against the dollar today.
Okay. Well, on bonds, Bhaskar Panda adds that the Indian benchmarks are moving sideways without any specific inputs. RBI has already announced bond sales on 13th of July. He expects the 10-year benchmark bond yield to trade in a range of 7.86 to 7.9 today.
All right, as I said earlier, it was a massive rally that we saw in the Dow overnight, more than 300 points, and some earnings upgrades coming in as well from Bank of America Merrill Lynch. Nigel is here to give us more of the world view. Nigel, over to you.
Well, the US markets, they had a very, very good trading session. The Dow put on more than 300 points, so good going there. Banking stocks, they did very, very well in yesterday's trading session. You had the whole host of them, the likes of Bank of America, Citigroup, and even other stocks like the Goldman Sachs as well as JP Morgan Chase. They did well. The top gainers, though, on the Dow included the likes of Boeing as well as Caterpillar. They were up anything between 2 to around 3.5% in yesterday's trading session. Well, it's start of earnings season, so we'll be keeping an eye out. This week itself, we have all those three frontliners that come out with their set of numbers. But the real action was in the European markets. We had the FTSE, that was a relative outperformer, ended with gain of around 1%. Remember, yesterday, UK Foreign Secretary Boris Johnson, as well as Brexit Secretary David Davis, both of them had resigned yesterday. And we also got commentary coming in from their Prime Minister, Theresa May. She said that all possibilities are open, and maybe, in fact, potentially, they should be prepared for all possible outcomes, including no deal and maybe no Brexit as well. So that was something that had a reaction in the currency space because the pound weakened against the dollar. It weakened against the euro as well. In fact, against the euro, it's at a 4-month low. No worries in terms of Asian markets, all of them trading well in the green. And that would mean that the SGX Nifty as well is indicating a 30-point bump up. Back to you.
Okay, thank you very much for that, Nigel. Yes, Britain in a difficult spot over there and may have to contend with a hard Brexit. Well, the world is not bothered because it's moving on the engine of probably US growth and growth elsewhere as well. Jeffrey Dennis, Head Global Emerging Market Strategy at UBS, joins us on the phone line. Jeff, thank you very much and thank you for staying up for us. What do you make of this fairly big rally that we have seen across Asian markets, European markets? Is this a growth-led rally? Will it have more legs?
I think it will have more legs. I think the markets feel much better, or suddenly, I think, since the low that we hit in emerging markets anyway in late June. And I think there's a real sense out there that maybe this does signal the end of the big sell-off, of course, that began in late January. Now, I think there's a number of factors driving this, but probably the two most important are we're not getting any more escalation, at least at this point, of the trade dispute between the U.S. and China, following, of course, the imposition of the first phase of U.S. tariffs last week and China's retaliation. So we've seen no potential escalation of that at the moment. And secondly, as one of your correspondents was saying, I think the payrolls report in the U.S. was reasonably benign, and the much better behavior of the U.S. bond market is helping. And at the same time, of course, the dollar has started to fall. So all of those together are good for global growth. They are very good for risky assets, and therefore they're very good for emerging market equities.
Okay, Jeff, hi, good morning. I'll come to emerging market equities in a bit, but I wanted your thoughts on the earnings recovery that we're seeing in the global markets, courtesy the up move in crude prices. I mean, Bank of America, Merrill Lynch raised their 2018 S&P 500 earnings forecast by 4%, citing higher crude prices. Do you get a sense that, you know, we could see the recovery in the equity markets led by this?
Yes, I think so. We've seen actually our U.S. strategy team raise their earnings forecast about 2 to 3 weeks ago to support what is a very bullish outlook on the market as far as they're concerned. So I think I mean, obviously oil is a mixed blessing. You know that very well in India. There are some countries that suffer from higher oil prices, some countries that do well. So I think, yes, you may be seeing some energy-driven upgrades in earnings, but I think the underlying story as well is still a pretty solid global economy. We've just actually raised our U.S. GDP forecast in the last couple of days. And so the global economy being decently strong still, I think that's creating some optimism over corporate earnings growth. We think there could be some downgrades in EM earnings as you go forward because of the weakness of currency that you've seen over the last several months. But generally, the earnings picture does look pretty good, and I think justifies a rally in markets.
Okay, well, what would your pecking order be in that case? While you say emerging markets have once again resumed their rise after the troughing out in mid-June, would India be a little lower in your pecking order simply because for us crude is not the big advantage it is for, say, Malaysia or Indonesia?
Well, certainly, of course, there's a lot of things going on, not just the crude price, but in fact, we're currently, obviously, in the language of the business, we're neutral in India. We don't see it particularly as a market outperform. Some of the markets that we like at the moment are Korea, Indonesia, Russia, some of the big markets like Mexico as well after their election a few days ago. But I think what's really interesting is that having seen a very strong year last year in India, driven, of course, by local flows, as you and your listeners will know, some significant weakness in the Indian market earlier this year as you started to see foreign investors really lightening up. India has actually been quite resilient in terms of the local equity market in the latter stage of the sell-off. And so it's behaving more like a neutral. We certainly don't think it's an underperform, but I think what we want for India to see the market doing much better and becoming more of an overweight for us, you need to see a better earnings story in India itself, which as you know, has been somewhat disappointing, frankly, for several quarters.
So at this point in time, you wouldn't put any fresh money to work in the Indian markets?
Well, I think, frankly, we're constructive about EM equities generally, and so to the extent that, you know, India is a neutral as opposed to an underweight, it certainly isn't a market we would be avoiding. We certainly think investors should be benchmark weight, and so to the extent that we do think markets are going to rally from here to the end of the year, yes, I think we would put some money to work, but as I say, I think there may be some better opportunities elsewhere. I mean, obviously, as you know, we continuously have these views on countries, you know, under review, continuously monitoring them. And right now, I just don't see India as an outperform. But as we like the asset class generally for the rest of the year, I think you probably can put some money to work in India as well, but just not as an overweight.
Okay. Well, Jeff, finally, can't things turn on a dime? I mean, is it a given that dollar will not get stronger? After all, the US is going to borrow more because of a higher fiscal deficit. You know, therefore, dollars will have to rush back to the United States. Is there a possibility that dollar index goes back to 95, in which case the EM trade once again looks shaky? And, you know, interest rates, because of this good showing of the economy, rate increase worries.
Great question, if I may say, with probably a complicated answer. I mean, what I've not mentioned here is that, of course, one of the reasons that's allowed emerging markets to start to stabilize, indeed markets generally to stabilize, is that the Chinese currency, which suddenly weakened sharply in June, has started to bounce a little bit. Yes. So you're absolutely right. All of this could turn on a dime if the dollar was to start to rally once again. It's just that we have to make a call here. We think the dollar's overvalued. We think that the Fed is broadly priced in. We think that bond yields are not going to go much higher than they are now. And so this supports our view of stable bond markets, a lower dollar. But we're all humble. We could be getting this wrong, but that's the view we have, and I think it's very helpful for equity markets generally, but particularly for emerging market equities.
Well, we are also enjoying the ride, no two ways about that. Jeffrey Dennis, thank you very much for joining us with your analysis today. So at the moment, quite clearly, as Jeff Dennis is pointing out, the consensus is that the dollar ought not to strengthen, and therefore that should keep the emerging markets. And very importantly, the Chinese yuan also has stopped falling. It stopped on at that 6.61, 62, 63 mark, didn't go on to 6.7 and things like that. So definitely, okay, today 6.60, that's even better. So clearly stability returning to emerging markets.
There's actually a pretty sweet rally across the Asian markets this morning. If you look at markets like Hong Kong, up more than 160 points. The Nikkei, the Japanese market is also piling on its gains. Of course, it's led by the move that we've seen in Wall Street and the earnings-led reactions over there, especially the commodity producers and suppliers to those producers. But our research team is here to give you the list of top 10 stocks you need to watch out for as we head into trade this morning. With the way crude has been shaping up, we're going to also keep an eye out on a lot of the oil marketing companies today, Lata?
Yeah, I would think that should not be the ones that would be the forefront of the rally. I wouldn't be surprised if they were still green if the rally was strong, but clearly they should be underperformers. Well, they have regularly been allowed to pass on the hikes, but nevertheless, they would not be the most favoured stocks.
Okay, well, let's move on then. Today's going to be a big day because you have TCS's numbers coming out, but also HCL Tech will be on our radar. Reema's here to tell us more. Reema.
Hi, Sonia. Good morning. Well, after TCS, HCL Technology has said that the board will be meeting on the 12th of this month, where they will consider a buyback. A 10% buyback is roughly a size of about 3,700 crore, which is 2.7% of its outstanding equity. A 25% buyback, which is if they take the shareholder note, that is an amount of close to about 9,200 crore or 6.8% of the outstanding equity. The company has cash of close to about 10,000, 11,000 crore rupees. Promoter holding stands at 60%, and like last year, we expect the street believes that the promoters are likely to participate. Now, company did a buyback last year as well. The size of the buyback last year was about 3,500 crore rupees at a 17% premium to where the stock was quoting. And even this time, a lot of people in the market believes the buyback size will be similar to that of last year. So say between 3,500 to 4,000 crore rupees. Back to you.
Okay, thanks a lot for that. So HCL Tech green on buyback. Nisha, first, congratulations to you. You broke the story that Aurobindo is looking to buy the US generics business of a company. I'm unable to pronounce the name, but you go ahead and tell us. Now it's getting closer, the buy?
That's right, Lata. We reported that it's going to be in advanced talks. Aurobindo is in advanced talks.
Yes, go ahead, Nisha. Okay.
So, I think we can't hear you very well. So what we're going to do is we're going to patch that line once again. In the meantime, some good news for all you travel enthusiasts. A 4-day anniversary sale coming in from Indigo between July 25th and, you can go and perhaps avail that. Indigo will be in focus. Apart from that, we were talking about some of the pharmaceutical stocks and some more tweets coming in from Donald Trump. Let's find out what they are and why we should be looking at Indian pharmaceutical companies. Ekta, over to you.
Well, actually, it's quite a scathing tweet which has come out from Donald Trump last night, where he has actually pulled down Pfizer for raising prices, which just took place last week. Remember that Pfizer raised prices on around 40 of its drugs, including its key drugs such as Viagra in the US markets. It was the second price hike which was undertaken by Pfizer, and hence they've raised cumulatively by around 20% this year itself in terms of drug prices. So Trump has obviously tweeted against it. His US Health Secretary has also said that there could be some measures that they could expect, and this could actually just be the starting point in terms of what could be expected in terms of reducing drug prices in the US. Trump also makes the comparison of drug prices in in the US as compared to other countries such as Europe, where it's much cheaper. So maybe there could be some angle to that which we could expect. But nonetheless, all of the drug companies which have an exposure to the US will be in the red today.
Okay, that's important. Well, we'll keep that on our radar. It could be a sentiment negative. And in any case, pharma stocks have done well, and it's quite possible that they're in for a churn. Let's wait and see if this is the catalyst. I just want to point out that Hang Seng has just lost a bit. You know, it started gung-ho with about 1.5% in terms of gains. It is still higher, but it is now 0.6 higher. And it's about 100 points off in the last hour or so, and about 150 off from the day's highs. Still higher, Hang Seng, as you can see, 0.3. But early morning when we were entering the office, it was about 1.3 higher. But just keep that on your radar. We'll get to other stocks that would obviously be very important today. Mangalam Dish TV results.
That's right, Lata. So good set of numbers coming in from Dish TV. The results were ahead of our expectations. We started the top line, a growth of 8%. Remember, this time Dish TV, we're looking at the numbers quarter on quarter. Year on year, they are not comparable on account of the Videocon consolidation. So revenue growth of 8% quarter on quarter is above the street estimates of 2 to 3% growth. As far as EBITDA is concerned, that is where the big beat came in. 557 crores is what the company posted. A large part of the street was working with anywhere between 450 to 500 crore rupees in terms of EBITDA. Average revenue per user, the amount that people pay per month as far as Dish TV is concerned, that one was 214 rupees. This compares with 201 rupees, and that came in because subscriber additions, nearly 3 lakh of them came, 44% of them were HD subscribers. The only fly in the ointment perhaps is the finance cost, which came in higher by 34% quarter on quarter. That is something we'll have to watch out for, but overall the numbers were ahead of estimates.
Okay, and the management has reiterated merger synergies of about 500 odd crores in FY19, and a lot of brokerages have been quite positive post the Dish TV numbers. So expect that stock to be up today. But let's find out why Sonal is watching SRF this morning. Sonal, over to you.
Thanks a lot for that, Sonia. Well, I'm watching for SRF because the company has planned to set up a plant overseas for an investment of around 420 crore rupees, and the plant will be manufacturing BOPET and raisins. This is one of the very strong segments that the company is working on. The capacity of this plant will be around 40,000 tons per annum, and company is expecting significant cost savings from this particular plant. But we'll have to watch out for what the capacity utilization will be, because so far in BOPET plants they have been working on optimum utilization. Another thing that I'll be watching out for is how they will finance this particular investment, because total debt as on 31st March stood around 2200 crore rupees, and cash and books was just around, cash and investments in books was just around 190 crores. So we'll have to watch out for what the company really does. Back to you.
Okay, thank you very much for that. Abhishek, IDFC's promoters bought shares. Is that significant?
Well, Lata, they have bought an additional share of 2% from open market in IDFC Bank. So IDFC Holdings has done a transaction in tranches between 11 June to 6th of July. And they have now the total holding at 54.81% as against 52.81% earlier. Now, these transactions have been done, you know, to hold their holdings to about 40% level in the consolidated or the merged entity, that is Capital First and IDFC Bank. And this is as per RBI's mandate. So earlier it would have been at 38%, but with this transaction it will remain at 40%. Back to you.
Okay, thanks a lot for that. So IDFC Bank will be in focus. But just to get back to the Aurobindo Pharma story, we learned from sources that Aurobindo Pharma is in advanced talks to buy Mallinckrodt specialty generics business for a likely amount of $800 million. Remember, Nisha was the first one to tell you about that story in the month of June. I think at the end of June she had broken that story.
Okay. And she had also told us that the telecom department has approved the merger of Vodafone India and Idea Cellular. However, we should note that sources say the nod for this $28 billion deal to create the country's largest mobile service operator has come with some riders. Under the conditions set, Vodafone has to pay 3,900 crore rupees for liberalizing non-auctioned spectrum.
Okay, so those are all the stocks that will be in focus today. In case you missed out on any of them, don't fret. Here they are. The stocks with positive news flow are HCL Tech, Aurobindo Pharma, Dish TV, Idea Cellular, IDFC Bank and SRF. While stocks with some negative news flow today, IOC BPCL because of the way crude has been rising, Sun Pharma and Lupin.
All right. Well, here's some more corporate info before we get into a break. My colleague Kritika Saxena caught up with Anil Agarwal, the executive chairman of Vedanta Resources, to speak about the corporate holding structure in India and whether simplification was possible in terms of a merger of Vedanta with Hindustan Zinc. There are many more questions and we will play snatches of that conversation. This is the first bit.
I don't have any plan because I have nothing in hand.
Nothing current.
There are two separate company and Hindustan Zinc as and when, and I'm not sure whether all the share will come to us. What will happen, who knows? But it is, we always prefer that our investors are happy.
Yeah.
And the people prefer that the simplification process. So
further simplification in India makes sense. And how would that happen now?
We can again talk in future what will happen. And
so
we can keep creating a story.
Currently,
but
let's talk about the next 6 months. What's the plan for the next 6 months? And
I have no idea whether the Hindustan Zinc will be divested by the government. And I'm not here because there's a government process.
Fair enough.
As and when they made enough money, they're very pleased. I'm very pleased with the government. They have done fairly well. They have been cooperating with us. Their board people are on our board, and they so I'm very happy. As and when they take a decision to divest, we'll see at that point of time.
Okay.